All right. Good morning, everybody. What day is today? Wednesday? I don't even know. Days are all thrown off because of the holiday. Welcome to the morning show here on Stock Market TV. Spencer, Steve, JC, Alfonso with you this morning. Our guest today, Willie Delwiche, the one and only. He'll be on at around 9 o'clock or so. We'll have Mornings with Mary on at 9:30. And we got to talk about this big change, or changes, I should say, to the two major Dow Jones indexes. We'll talk about that. Interesting stuff. We do have NVIDIA earnings on deck, so I'm sure that'll come up. And that's the drill. If you don't know what to do by now, hit the like button. It's very easy. It takes 2 seconds. And let's go.
Oh, hey now. It's hump day. Are you guys
already?
ready? Are we partying tomorrow?
I didn't think so, but I don't know now.
This Josh Brown fellow, he does love to throw birthday parties for himself, but then he invites, he's like, oh, it's a birthday party for JC and Josh. And he's been doing this for decades at this point. I just really think Josh likes throwing birthday parties for himself.
I think Josh just likes throwing parties.
Yeah, that's probably fair. Josh has toned down over the years. He was a wild man back in his 20s. He's an old man. His daughter's going to college. She's going to the U, actually.
I know.
Very cool. Very cool. Very, it warms my heart, right? Warms my heart.
I'm excited. It'll be fun.
I feel like Spencer's not excited to party. He's wondering when it's time to go home.
Spencer, you're coming, right? Well, Spencer, you know his process, right? You like to come a little late and leave early.
No, I don't like going away. I don't like going away. I don't like being late. I hate being late.
Right,
yeah,
so
he's more of an Irish exit kind of guy.
You're punctual, getting there, but then you're out.
Yeah, look, I mean, I do have a place to be on Thursday night, so I will be leaving.
Excuse me. Okay, cool guy. So many.
No, listen, I look. It's not my fault. I'm going skiing this weekend.
Spencer,
okay, I haven't skied in.
You're so pops, Spencer. You're so pops.
I haven't skied in 2 years. It's the first weekend for me. So
all right. I just hold on. I just canceled my dinner reservations. I'm being told that the best burger in New York City is now at this bar Americano. Have you heard of this, JC?
No, it's Fort Charles, Oshaval.
All right.
You weren't here for the Josh Brown episode. Where was Strazza?
No, I was
he was at Exchange.
Oh yeah, you were at the Nerd Comic-Con or whatever. Comic-Con for finance nerds.
Whatever you want to call it. I had a blast.
You would. I told you to go. All right, hit it. Let's talk about markets. All right, so we've got Dow futures down another 100 points today, about 25 basis points. S&P futures down almost 20 handles, about 36 basis points. NASDAQ getting the crap kicked out of it once again, down 70 basis points in pre-market trading. That's 123 points for NASDAQ futures. 30-year bond futures flat. I must say I'm pretty impressed with how bonds have held in over the last couple of days. Silver flat, copper flat, gold flat, oil flat. And the dollar mixed with the euro flat, yen flat, not much happened in the dollar. Interest rates continue to creep up, pushing 4.3% on the U.S. 10-year yield as the volatility index also continues to creep up. You've seen the increase in implied volatility at the individual stock level really all year. You haven't quite seen much action in the VIX. If you look under the surface, you've been seeing higher lows all year in the VIX, and just now starting to see a little bit of a spike, but not much there yet. And then over in the old funny money, of course, Bitcoin down off the lows. It was down much more earlier today, right around 51,000, down about 1,300 points. Ethereum down 4% on the day, a little bit over 100 points. And Solana.
Yeah.
Solana down another 4.5%, hovering right around 103. Total crypto market cap back down under 1.9 trillion. Any thoughts, Strazza? Any thoughts?
I really was hoping these consolidations would resolve higher. So I don't think it's great, but
Hope is not a strategy, Strazza, right?
I was anticipating that they would resolve higher in the direction of the underlying trend.
Got it. But the underlying trend for the majority of stocks is not up. So it's hard. Mathematically, it's hard for the indexes to go up without stocks. Also, I have an interesting one. Also, we still have not seen an expansion of new lows. Maybe we see it today, maybe we see it tomorrow, maybe we don't see it at all. But what I really like about looking at the new lows list is that it's not my opinion, it's not Strazza's opinion or Spencer. It's just math. You cannot have a correction of any kind in the market without stock prices falling. Right?
Yep.
Like, I'm not trying to be obnoxious or like the Yogi Berra of technical analysis. Like, this is just math. You can't have a market correction without the prices of stocks falling. It's that simple, right? So if you are looking for a correction, right, to get worse, I would look for perhaps an expansion in the new lows list and not the new 52-week lows list, because there's not anything happening down there. Let's start 10-day lows list, 21-day lows list, 30-day lows list. There's nothing happening there.
No.
Right? So and if you're long stocks and you think the market's going to rally over the next few months, the lack of new lows is consistent, I suppose, with your thesis. So if you do get the expansion in new lows, which mathematically would indicate that more stocks are falling, which is indicative of a market correction, of course, that would be up to you to act accordingly. I myself, I'm too old for this shit. I've seen this many, many times before. If it walks like a duck, talks like a duck, probably not a chicken, right? So, I've started positioning myself accordingly over the last couple of weeks. I've got a good chart here for you, Strazza. I know you remember it well. You and I were working very closely together. This was in 2020 chart. Slide 2 there, Spencer. Slide 2. Do you remember this, Strazza?
Yep. I saw that. I saw this morning.
And if you recall, the Dow transports were making new relative lows. Regional banks were also severely underperforming. Does any of that sound familiar?
They didn't have the Uber then, though.
They still don't.
Not yet, right?
They don't?
No, look, it's fine. It's okay.
What is it that's fine? Tell me what's fine.
Little divergence.
So this is 4 years ago. This is go back to COVID. Go back to COVID. This is 4 years ago. You and I knew nothing about vaccines or viruses. We know less now. Would you agree with that?
Oh, definitely.
Yeah, I'm definitely way more confused now. I thought I maybe knew something then. I know nothing. I know less than nothing.
No, it's bad.
But when we were getting short and defensive in January of 2020, was that because of a virus that we saw coming? Was that because of, of some pandemic of some kind? Or were we getting short equities and getting defensive because breadth was diverging, regional banks were underperforming, et cetera, right?
Yes.
So in a lot of these cases, you don't know why the market is doing certain things. The market sniffed this out months before any virus.
Yeah.
Right? The market had already sniffed this out. So why don't we fast forward to today, 4 years later? Actually, right around the same time, if you recall, I think the S&P and the NASDAQ, even though everything was already falling for months, the S&P, NASDAQ, and Dow made one more new high. Even financials, if you recall, made one more new high into mid-February of 2020 before everything came tumbling down. You know what didn't make a new high in February was European banks and Indian banks. Funny, they're not doing that this time around either.
And JC, even though it was to a much smaller extent, we had it at the end of 21 also.
What do you mean?
Dow transports, I think, peaked in November. The Dow made a new high really until January, early January.
Just a brief little guy?
Couple months.
This was at the end. Let me see. This was at the end of 21, you're saying?
Yeah.
And how do you feel about this old Dow theory? You into it?
Yes, but as with any divergence, just like the breadth divergences you had been citing and the momentum divergences, sometimes you just have to give the market a chance to catch up.
You're right about late 2021. It's interesting. I
It's
mean,
not
listen, you
always,
see it all the time. You saw it before the great financial crisis. You saw it before the dot-com bubble in 2000. Transports were already getting crushed.
but it's almost like the AD line. You also see it all the time when there's not a crash or a
Do
correction.
you? When? Like when?
Throughout this year, throughout last year.
We didn't see it at all last year. What do you mean?
Yeah, we did. You see it
When?
all the time for a couple months at a time.
Nope.
Dow makes a new high, industrials don't follow. See it in every cycle. Like
Nope.
otherwise, you're telling me that every day the Dow industrials make a high, Dow transports make a new high with it. It's not how it works.
It's not an exact science. The longer it takes to confirm, the more bearish it is. The quicker it confirms, the more bullish it is, right?
I agree.
This goes back to the 1880s. A journalist from Springfield, Massachusetts, named Charles Henry Dow, my favorite journalist of all time. His job was to write about companies and write about the stock market. And he'd go knocking on doors, asking them about their company. And they would say, sorry, Charlie, our business is none of your business. Remember, this was way before the SEC. This was 40-something years before the SEC. So, companies did not have to talk to Charlie, and they chose not to. For good reason, right? Why the hell would they? So Charlie realized that there was a group of companies that made the goods, and then there were a group of companies that delivered those goods, right? So you had the industrials that made the goods, and then you had the railroads at the time that delivered those goods. Then Charlie died in the early 1900s, and decades later, they renamed those indexes the Dow Jones Industrial Average and the Dow Jones Railroad Average. And obviously, we have different methods of transportation, so that ultimately changed its name to the Dow Transportation Average. And when one of them is going up and the other one's not, that's usually a problem, right? We saw it in the dot-com bubble in 2000. You saw it in the great financial crisis. You saw it in late 21. You saw it pre-COVID. You saw it in 1957. You saw it in 1968. Like, you see these again and again and again. And then we're seeing it now one more time. So,
but this analysis, this kind of analysis in a vacuum is not helpful at all, right? You're more concerned.
I wouldn't say it's not helpful at all, but it's a lot less helpful without putting things into context, right? It's not one magic indicator. It's, hey, this is happening. What else is happening? Oh, the new 52-week highs list peaked over 2 months ago. Oh yeah, that makes sense, right?
You're not, talking about this just because you're seeing this. You're seeing a list of other things, other bearish data points.
Well, if we weren't
saying,
no, that's not true. No, that's not true. If we weren't seeing other bearish data points, let's just say, and this was the only one, I would be like, hey, look at this.
Yeah, but
those over there look really strong. Those over there are not saying the same thing that this is saying, but heads up, this is flashing over here. Like, that's what I would be saying. But what I'm actually saying, because of what's happening, is, hey, this is happening, but you got all these things all the way over here that are also happening, right? So it's not in a vacuum.
So, no, I know. And the divergence has been in place now since last time we had a new high in transports was like late July.
Well, you just had this thrust. You just had this thrust, not thrust, but like just this last leg higher in the Dow industrials, and you also had it in the NASDAQ and the S&P, and the transports were just nowhere near there. Nowhere near there. By the way, Dow futures are down every single week for February, for those keeping score at home.
Listen, if you go and sell all your stocks every time there's a divergence like this, it's not a winning strategy. That's all I'm saying.
It's definitely a lot more winning than losing if you go back and check. But I will tell you, I will agree that we don't want to look at anything, this one or anything else for that matter, in isolation, right? It really becomes a weight of the evidence approach here. Strazza, I got a good one for you. I threw out in the old Twitter. Don't forget for recess today to tell you about my beaver problem. Not my beaver problem, my raccoon problem. I'm having raccoon issues, dude. Can you believe that shit, dude? Raccoon issues. I didn't have these kind of problems in the city.
Shoot them.
That's what people say. Just shoot the damn raccoons. I don't think I'm allowed to do that.
But
you think my HOA is going to be cool with that?
You got a big yard. Nobody will know. Use a pellet gun.
Yeah?
Yeah.
Dude, some of my neighbors got some sweet pellet guns.
Yeah, I know.
Yeah, you think I need one? Hold on. All right, I want to show you something quick
Hell yeah.
here. So this was it was a poll that I put up yesterday.
I have opinions.
I know. I figured you did. Strazza's not afraid to share his thoughts.
It's
All
a
right,
language exercise. It's a language exercise. It's the wording of it.
It is. That was my bad too. That was my bad. So throw up slide 2, Spencer. So this was asking the old Twitterati. Strazza's not the only one with opinions. People on Twitter also have opinions. And I asked, which index is the best representation of the United States stock market? 60. Look at that Fibonacci number. Look at that. 61.8, 61.9% said S&P 500, 38.2% said everything else. You think that's Leonardo Fibonacci strikes again?
Look at that.
Crazy, right?
Okay, so here's the situation. When you say which index is the best representation of the U.S. stock market, tell me what you mean, right? Because this is vague, it's broad, and this is where we're tripping up.
When I ask you, when you and I are in the golf course, and let's just say my phone died, I'd be like, "Hey, Strazza, how'd the market close today?" What are you gonna tell me?
S&P 500.
You told me S&P was down 3 handles.
That's it. Yeah. Because most of the times when we talk about these things, and the reason why it's the S&P that's quoted on the cover of the Wall Street Journal every day, it's because
Is it?
This is what matters for most people.
Charlie Dow would not be thrilled about that.
No, hold on. Hear me out. So the S&P 500 index is the best representation of U.S. stock market investors. How did I do today? Right? That's what you're saying. That's the question you're really asking. How did stocks do today? How did my portfolio do today? S&P 500. Because like you said,
if you're long,
it's a cap-weighted world, right? Most portfolios look at least closer to that than some equal weight is something. But if you said, what's the best representation of the U.S. stock market? To me, that's like, how are most stocks doing? I want the value line. I want the Russell 3. I want something equal weighted. Russell 2000 even works. You know what I mean? But they're different.
Don't we live in a cap-weighted world, Strazza?
I get that. So if you're saying, how did U.S. stock market investors do today? S&P 500. How did the U.S. stock market do today? I think you're asking, how did most stocks do? But that's typically not what we're talking about.
Throw up a new slide 3, Spencer. Ready?
And the only reason,
hold on, I purposely left these the same color. So you've got the Dow Jones Industrial Average and the S&P 500. Strazza, you and I do this for a living. You and I do this every day. Neither one of us could pick which one's the Dow, which one's the S&P. Neither one of us. Right?
No. Dow's the one that's sagging in the 70s and 80s.
Maybe, I guess. I don't even know. I don't even know. And I could draw these charts for you, and I can't tell you. So the lesson here is, and I could make fun of people for it because I used to be one of these like, oh, I'm on the institutional side, JC. The institutions are the ones that run this market, and the institutions follow the S&P 500. The Dow is stupid, JC. It's only 30 stocks, JC. The Dow is price weighted, JC. That's dumb. All right, maybe. They move together. So if you want to do a sum of the parts analysis on the market,
yeah,
you could look at all 500 if you want. I mean, we do. Or you could look at 30. You're gonna get the same answer.
Yes, and I think that you can substitute the Dow in for the S&P 500 in that conversation of how are U.S. stock market investors doing.
How'd the market do today? Dow was down 100.
Yeah, that works. Yep.
That's how people talk.
Yes. We had a little analyst squad powwow yesterday after the bell, and we were just kind of shooting the shit and talking about it. And Grant brought up a good point, as he almost always does. Grant's going to be on the show Friday, by the way, everybody.
That's cool.
No, next Friday. We don't have a show this Friday.
So we don't have a show this Friday. We're going to be hungover as hell this Friday.
Yeah, no show this Friday. So that's awesome. We'll get Grant on the show. He's our stat guy. He's our quant guy. So we're talking it out, and I'm trying to make the same points I just made to you. And Grant says it's also the benchmarking, right? Like It's not up to us. We don't even get to choose. If the S&P 500 is the benchmark 90% of the time for fund managers, mutual funds, whatever, hedge fund managers, then that's the one that we should use. And I thought, and I said to him, I worked for 3 long short equity funds in my life, and I would review the traders' comp calculations. Every single one is benched to the S&P 500. I'm not saying that's going to be the case for every mutual fund manager, but I would argue that that's
it is.
95, 99% of hedge fund managers. It's the S&P 500.
Yeah, but that's not our problem.
No, it's not. But we should acknowledge it.
Agreed, 100%.
Totally.
But we don't have benchmarks. Like, I don't have to beat the S&P 500, right? Like,
I'm trying to buy a boat.
We have different strategies that do different things and accomplish different things. You think my bond portfolio is going to outperform the S&P 500? I suppose it could. Depends how bonds do that year and if we're in the right ones. But, that's not the goal of that particular strategy, to outperform the S&P 500. It doesn't matter what the S&P 500 is doing. It's a bond strategy, right? The bond strategy could rally 20%, 25% and still underperform the S&P 500 potentially, right? Or dramatically outperform. Right. So, it really just depends. You're trying to buy a boat. I'm trying to buy a beach house.
I know. So those are our benches. So I'm kind of good with this conversation. I think we've kind of driven this thing into the ground by now.
Spencer, why don't you tell us how we nailed it. Strazza, we fucking nailed it.
Again.
Amazon in for Walgreens. Did we not nail that?
All right. So let's talk
The
about
next one is, when does Google replace Verizon? But we'll get there.
So we literally, yes. And it's cool, but it wasn't rocket science, right? Like this, if they didn't put that one in and take that one out, people would, and even Google, I know there are people at Google right now who are like, God damn, this sucks.
Because they both split. Amazon and Google both did the split, so they're ready to go.
But here's
Verizon sucks. Yeah. Walgreens sucks.
Yes, but Walmart split, and that's what triggered this. And that was the only one company. There's only room for one right now, right?
No doubt.
So Walgreens is out. Fine. Amazon's in. So, and here's the thing: Google, they're probably kind of like, oh man, we didn't get it. They understand. The Dow has a mandate, and they're simply following their mandate. They're trying to be the best representation of the U.S. economy. Amazon not being in there is crazy. Amazon stock, we talked about this last week, is the best representation of the United States economy. We're a consumer economy. We're all consumers on Amazon. That's the one. It should have been in there a long time ago. So that was the obvious choice. Now I think it gets interesting because we thought Google was the obvious next choice. NVIDIA's right there. NVIDIA's saying, hey, what about us?
You kick out Intel or Cisco or one of these craps. And can we talk about how they're adding Amazon now after the stock doubled?
NVIDIA
it only added $1 trillion in market cap or something crazy, and now they're going to add it. Thanks, guys. Thanks. Well, journalists.
I don't know. I don't know why that matters. I don't know why.
It's not that it matters. It's that it's par for the course.
Yeah,
they kick out Exxon right before it triples. Yeah. They bring in Amazon after it doubles. They kick out Walgreens after it loses 90% or whatever. Like, it's not surprising. It's just funny.
Walgreens will be up 100% this year.
Yeah, 100%. Easy. Easy. You flip the book long Walgreens all day, bro. All day.
When does NVIDIA split their stock? What are they waiting for?
Maybe tonight.
Seriously.
Well, yeah. Don't they report tonight?
Yeah.
And why are people so obsessed with this report? Like, why? Like, for us mere mortals who don't give a damn about your economy or your earnings or whatever, like, why should someone like me give a damn about what NVIDIA has to say tonight?
This is a this is like the latest technological revolution, right? So investors
that doesn't sound bubbly at all.
No, and it's important that people understand this. I'm not the one saying this. Whether it's Steve Cohen,
just said it right now.
Whether it's Steve Cohen at a private dinner or Paul Tudor Jones, the smartest hedge fund managers on Wall Street are overwhelmingly bullish right now, and their bullish thesis is that this is the industrial revolution. This is the internet.
Well, they're acting accordingly because hedge funds are the most long and overweight technology that they've ever been. So clearly, they're acting upon that thesis that you speak of.
No, but what I'm saying is true. I promise you. This is
JC.
this is the
I
narrative.
believe you. I believe you. Sounds right. I believe you.
And it's happened
JC
before.
also-
Like, I know it sounds crazy, and 3D printing wasn't real and all this stuff. Fine. But we have had these productivity revolutions before, and they're just making the bet that this is the latest one. AI is the best barometer of that, because other companies need to come to AI, buy their chips to go and deploy AI in their own businesses or to use it for other people, yada, yada, yada.
You want to be jealous? You want to be jealous?
Huh.
This is a Yeti that I got from Katie Stockton, a
Oh,
Fairlead.
cool.
Dude, and the top of the lid is a magnet,
What?
right?
What?
Yeah, look.
What?
It's so good I can't even take it off. Just take my word for it. Like the little thing
Okay.
is a magnet. It comes off, you can clean it, put it back on.
They're all like that.
Shout out Katie Stockton.
They're all like that. I saw Katie last week. She's all.
Oh, they're all like that? I thought this was like a special edition one.
No, because I know that because it annoys me because I always lose the magnets.
Oh, haha, you would. All right. Are you a little jealous?
Also-
a little jealous? This is great.
Yeah, it's a cool one. I don't know. I got so much gear at the exchange conference. I don't know how I didn't get that.
She sent it to
yeah.
me because we invited her to dinner the other night, remember?
Yeah. Oh, I want to have Kevin.
JC.
We're gonna get Kevin Abbott on the show.
Cool.
Get
Our
him on the
analyst.
show.
Yeah.
Was he there in Miami with you too?
Yeah, we were hanging. Great guy.
That's cool. Look, I'm double fisting.
Also, JC, the reason that tonight's report is interesting is because the report that sent this whole AI thing in motion was last May. So this is the last report with like the old comps,
Yes.
right? From like the pre AI world of early 2023, right?
For the record, Nvidia's
So-
already down 10%, like in a week. So
Yeah.
like
They listen.
down 10% in a week. No big deal. That's like, I don't know.
That's not a big
That's
deal.
all. Yeah, it's not a big deal. It's only like $200 billion
Here's the thing.
in a week. No big deal.
We're getting to the point, and to be expected, because yes, Spencer, this has been going on for almost 4 quarters now, where these tech stocks beating and raising just isn't enough. They got to just knock it out of the park. Some of these companies with these valuations. You're seeing with Palo Alto today.
Can we throw it up?
Like-
Thank you
like
very much. Can we throw a little earnings bumper up there? Throw Palo Alto before we bring Willie Boy in?
Listen, a light
I'd
guide
really
is
have Willie in.
a light guide is a landslide for some of these stocks right now. So you have to be careful. I just think the risk reward dynamic for a lot of these names, charts that look like this, has drastically changed.
Are you noticing how you're seeing? Fuck! Holy shit! Palo Alto's down 25%
Yes.
pre-market.
Yes.
Are you noticing the change in the dynamics of the market? You notice how in November companies like this weren't getting Snapchatted, right? Is that what you called it? The verb Snapchatted?
Yeah.
Now you're seeing a bunch of these getting Snapchat. You weren't seeing that in November.
And I know you hate it when I talk to you about the V word.
What V word?
The V word.
I don't know what. I don't want to say what I'm thinking right now. What V word?
These stocks have gotten expensive.
Oh, valuation.
What
Oh,
Guys,
valuation.
come on, get your heads out of the gutter. Jeez.
Sorry. My head was not in the gutter.
Unbelievable.
What are you talking about?
All right. Tell me why any of us should give a damn about valuation.
When your multiples get to a stretched level like this, and a lot of these are just historically stretched at this point. Not all of them, right? You got to kind of go pick and choose. Then you kind of got to be perfect, right? You really got to deliver. So we came from a place, right? Remember 2022? You didn't really have to deliver. There are no expectations for these companies. That's the place where you want to be. Now the very high expectations, you got to deliver. Good news can be bad news.
All right, so this chart obviously not reflective of the fact that we are at 275 this morning right now in Palo Alto Networks on a week guide. It wasn't. The guidance was bad. It was lower than the estimates and lower than their own previous guidance. So kind of a double whammy there. But it wasn't like it was like a catastrophic. I mean, the street thinks it is clearly, but like it wasn't like they missed by like 50% or anything. It was slight miss. And
what about CrowdStrike trading right now?
Yeah,
back below the 21 highs. You think that's coincidence?
I love CrowdStrike. I sold this one way too early last year, and I can't wait to buy back. So this one will be on my screen all day today. Maybe I wait a day. We'll see. But I like it here. I like it at this 290-ish level. And we talked about this yesterday. We said, pay attention to these ones that might get, pushed back to those prior cycle highs. Those are the ones I'm really interested in. So
probably a great short.
100%.
It's probably a great short.
Go ahead, short it.
I just love, in the same way that I like the gap and goes when it gaps above resistance. In this case, potentially we could be gapping back below resistance, right? So you have a nice risk versus reward entry because you could be short against the former highs. Spencer, can you throw up slide 3, please? All of these cybersecurities are getting the crap kicked out of it. And since when are these cybersecurity stocks getting the crap kicked out of it? What do you know? Since they hit those former highs. Where I come from, we call that resistance. Do they call it that in Connecticut, Strazza?
You lived in Connecticut. If you look at cyber,
shout out 203. Shout out.
If you look at CIBR, the other one, it's that price action you're talking about where you're getting that breakaway gap lower through those prior cycle highs.
What's the difference between the two, Strazza?
I think there's more cap weight in CIBR. That's what it looks like. I'm guessing. Well,
I'll tell you right now.
So it owns more Palo Alto and CrowdStrike.
So Hack is the 10% Broadcom, 7% Cisco, 6% Palo Alto, 6% CrowdStrike. Wow. And then CIBR is the NASDAQ cybersecurity ETF, and the 7% Broadcom, 6% CrowdStrike, 6% Palo Alto. Not that different.
Yeah. More Palo Alto and CrowdStrike though?
Less Broadcom. Yeah. A little bit less Broadcom, but similar.
Listen, It's a great area. This is one of those
great area. It's a great area to be short.
Yeah, maybe for like a week or two. Enjoy that. This is one of those.
I think I will.
Cybersecurity is one of those mega trends. Make a list. Check out this weakness. Stocks are selling off in sympathy. They're not the ones who just reported. Just saying, could be something here.
All right, I think they're good shorts.
Let's bring on Willie.
You think everything's a short like these days? So
I don't think that.
Bother saying it.
I don't think everything's a short. That's not true.
Everyone knows how you feel here.
You're not paying attention. I don't think everything's a short.
I don't know what you're like so upset about. Why are you?
Nobody's upset. I couldn't be happier. Are you kidding me? I couldn't be happier. I'm having steaks tonight. We're going to party tomorrow.
Mom and Dad, I'm bringing on Willie.
You're on these like doomsday spaces late at night. I don't know what's going on with you.
What doomsday spaces? First of all, they're all doomsday.
I'm worried about you.
Willie, you're coming on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Willie.
Hey, fellas. How's it going?
What is up, my man?
It's getting warm here in Milwaukee. I got tomato plants growing. It's lovely.
So hold on a second. When you do your gardening, you get things going first in the middle of winter, and then when the weather gets warmer, then you bring them outside. Is that what you're doing?
That's how we do it. Yep. Mm-hmm.
Yeah, and you got like special lights and shit?
Yeah. Well, I mean, like fluorescent lights in the basement, but yeah, it works.
Huh. I think I'm gonna need to give you a call over the weekend. You can give me some. I started gardening in California, and they told me, like, listen, JC, any idiot can garden in California, and as it turns out, any idiot can, right? Every day is a beautiful day. As long as you water it, you're going to do great. And I crush it. I was like, Mr. Gardener. Now that I'm in the East Coast, it's a whole nother ball game. Whole different ball game.
Oh, yeah.
Willie, what are we thinking here? Talk to me about markets. Talk to me about sentiment. Talk to me about seasonals. Talk to me about market breadth. Talking about the intermarket relationships. I dying to hear your thoughts.
Yeah. So I heard you guys going back and forth. I won't go back into valuations. You probably heard enough of that in the 30 seconds that you and Steve were talking about it. But just talking about some of the rollover in tech and some of these high flyers that are really starting to struggle now, whether it's the last day, the last week, the last month. But then you flip side that, and what went out at new highs last week? You had equal weight, you had industrials, you have broker dealers, you have Germany and Japan. And so to some extent, you have this movement away from recent high flyers, whether you just move to the sidelines or you short them, whatever, that's a matter of preference. But there's opportunity elsewhere. And that's what I really like about this market, is that it's not so concentrated. You can find opportunities on the long side if you're looking beyond just a handful of stocks.
How do you think this environment is different than last year?
Well, we're consistently seeing more stocks make new highs and new lows, where we've got broader support beneath the surface.
Do you think the market is healthier today than it was last year?
I think so. From a broad market perspective, I do. How that translates into what the indexes do is a little trickier because, the S&P 500 is heavily tilted towards that handful of high flyers. So, I think from a tactical perspective, de-emphasizing cap weight and moving away from, what the S&P 500 weighting committee has decided, are the important stocks, and be active on your own rather than following the active advice of the S&P 500 committee.
I'm going to stop you right there. Willie, my understanding from the journalist community is that the passive investing assets have hit all-time highs. Is passive investing even a thing, Willie?
No, you're just outsourcing the active decision.
You see how I throw those alley-oops there for you, buddy?
Oh yeah. I
Bring it home, baby. Bring it home, Shaq. So tell me, what are you doing? What is passive investing? What does that even mean?
You're literally outsourcing the active decision to an index committee. Like, that is literally what passive investing is. You are following someone else's lead. You're not buying the whole market by and large. You're buying a subset of the market that somebody else decided was important. I was talking with someone yesterday, news that Amazon is replacing Walgreens or will be replacing Walgreens in the Dow. Like, that is an active decision that is taking place in that index, but people see buying the Dow as being a passive decision. No, you're moving from, you can argue about the merits of it, but you are making a tactical decision there.
What you're doing is you're selling Walgreens after an 80% drawdown and buying Amazon after it doubled, is what you're doing, right?
Mm-hmm. Oh yeah, yep, exactly. We've talked about in the past the history of using those decisions on the part of index committees, almost from a contrarian perspective. They don't.
Hold on a second. Hold on. So the last time there was any change made to the Dow was August 2020. So are we calling one decision in 4 years active? Is that really active?
Yes. Well, he's specifically referring to more the S&P 500. It's just that the Dow made the changes yesterday, right, Willie?
Yeah, but either way, the point, the perception with passive investing is that you're not making a decision on where to allocate. You're being allocated everywhere. And you're not. You are whether you're following the S&P or you're following the Dow, you are following a subset of stocks that somebody else has decided are the ones you want to own, whether it's the Dow or the S&P 500. So it is you are being passive in your decision making of following an active manager.
Yeah, you're letting journalists manage your portfolio for you.
Depends on what index you're buying, I guess. But
usually a journalist.
No, usually not.
Willie, Spencer, can you throw up slide 2? You mentioned Japan and the strength in Japan and the new highs we're seeing in Japan. Is now the time to buy Japan? Do we ignore 1989? This is, Willie, Willie's got a lot of experience in this market, more than me, right? You got me by a few years, right?
Yep.
What do we do? What do we make of this, Willie? Come on, bro.
I'm looking at EWJ, not the Nikkei itself. So,
but EWJ didn't exist in 1989.
So it's making new highs. So does that 1989 high still matter for people that are holding the Nikkei now?
I'm asking.
I don't. If somebody is still out there that bought the high in the Nikkei in 1989 and is like, now I'm back to even, I'm going to sell that level. I'm a little bit suspicious.
When silver in 10 years ago, 12 years ago, when silver got back to those 1980 highs, when the Hunt brothers cornered the market, it sold off from there again.
So I guess this is the way I would frame it.
Right, Willie trained the Hunt brothers, right? Is that how old you are, Willie?
I am not that old. I am not that old. It would be better to get above that high than below that high, than stay below that high. But that's a nonsensical answer, because of course it's better to be above a line than below a line if we're looking at the long side of it.
What do you think, Willie? Is this voodoo? Should we ignore it or should we acknowledge it? What do you think? I'm acknowledging it.
I think we can watch it, but does it prevent me from saying that Japan looks really good right now? No.
Well, doesn't it always look the best, right? You know what I'm saying? Like, it's always sunny in Philadelphia.
It's darkest before dawn, and it's brightest at midday, whatever. But the trend work that I follow that does not incorporate the 1989 high is bullish on Japan, and so it looks good to me.
All right,
and that's not the only one. You could, and India is making new highs. EWG Germany went out at a new high last week. I guess the point is there are opportunities. I'm sorry, not EWG, the DAX. The point is there are opportunities beyond just this handful of stocks in the U.S. And that is what I like most about this market right now, is that you don't need to say, well, those are the handful that are going, love them or hate them. And that's where you need to stay. You as an investor, I as an investor can look for other opportunities, and we can be rewarded for engaging in those other opportunities.
I have a question. In terms of buying Japan, should we care that the Nikkei is price weighted, but it is objectively the most popular, the most widely followed Japanese index, but it is price weighted, right? So do we care about that as opposed to like the equal weight, right?
Yeah, I mean, I would. Most of what I'm talking about with Japan is EWJ.
Okay. Why EWJ when DXJ and local currency has done the best? Why are you an EWJ cat? Seriously.
Okay, so this is actually this is a good question.
I have those sometimes
because you do it. That's great. And this isn't a softball one. This is actually an introspective one. It's because what I know. It's what I know, and that's all of us who have been in the market for a while. We have a select set of whether it's international ETFs or sector ETFs or group ETFs that we know, and that's what we revert to. Because we're familiar with it. And so I think it is I think about EWJ because when I started thinking about ETFs, EWJ was the Japanese ETF. And so that's the one I think about.
Todd Sohn, I love Todd Sohn's strategy. When you find yourself in a situation where you can't, you don't want to mess around with the currency. Europe has the hedged ETFs too. There'll be others. Brazil, I'm sure will have one soon if they don't already. Split it 50-50, 50% DXJ, 50% EWJ. Now you don't have to worry about the currency and you're long Japan.
Yeah, well, and you know me, JC.
I thought that was a good, right?
I don't like to overthink currencies, so I don't spend a lot of time with do I want the currency? Do I not want the currency? Mostly I'm thinking I want to go with a thing I know that comes to mind quickly. That's what I think about. And so that's where I lean.
Let's talk about sentiment, Willie. Sentiment, okay. Whenever Willie and I start talking about sentiment, Strazza just disappears. He's like, oh, here we go. So I see newsletter writers, Investors Intelligence, most bullish since 21. These newsletter writers in summer and fall of 2022 were telling you to sell stocks. We were buying stocks very aggressively. That worked out very well. Not so much for them. Now they're telling you the opposite. They were telling you to sell the stocks when we were buying them at the bottom. Now that we're selling stocks, they're telling you to buy them. Granted, it's just one sentiment indicator. So I just wanted to throw that out there. What are your thoughts in general where we sit today, sentiment-wise?
So a couple thoughts on that. So the newsletter writers this morning, bears fell again. Bulls were down a little bit. Bears fell again. But it's a consistent theme across the sentiment indicators is that we've got a lot of optimism, a ton of optimism out there.
Don't
Like
you need bulls to have a bull market, Willie?
that's where I was going. You're getting ahead of me. So you don't want too much optimism. You don't want everybody to be in, but you do need to have bulls to have a bull market. All of the net gains since over the past basically decade have come when bulls have exceeded bears by more than 20% on the Investors Intelligence Survey. So it is difficult to aggressively fade optimism right now. And you also need to look at how sentiment responds in terms of excessive optimism versus excessive pessimism.
Took
It's
the words right out of
not,
my mouth. These are
yeah,
way more valuable when there's a lot of pessimism.
yeah, yes. So I from where we stand at a sentiment perspective, I would get much more concerned if we start to see optimism fade in a dramatic way. When we have so much optimism and then the crowd starts to move, that's when you want to pay attention to it. As Ned Davis has always said, go with the crowd until it reverses at an extreme. So it's not the presence of optimism that is a signal. It's optimism then followed by the retreat away from optimism. I think is the is the way I would focus on it. But at the same time, you got so much optimism, the room for the margin for error is pretty low. So get back to that valuation question you and Strazza were talking about. High valuations matter because things are priced for perfection. And if you disappoint even the least little bit, then you get those reactions that you're seeing in some of the stuff you were talking about earlier.
What about from a seasonal perspective? Worst couple of weeks of the whole year here. Is that too short term? Is that too tactical? Or does it matter? Is it relevant? Dow's down. Dow futures down every week so far for February. Not surprising.
So I think it would matter more if we weren't seeing broad participation beneath the surface. I think that's how
Are
I
we
would
though
think
with
about
the new highs list peaking over 2 months ago? You would consider that broad participation with every new high in the indexes? Fewer stocks make new highs. Is that broad participation?
More stocks are making new highs and new lows. That's the way.
Yeah, but
I'm
but the stocks and markets at all-time highs. Why would you be looking at the new 52-week lows list? There's nothing happening there. For the record, there's nothing happening in the 10-day lows list or the 21-day lows list either. To be fair, but you're subtracting one number. You're subtracting nothing from another number. Like there's nothing happening there.
Well, that is historically. I mean, you're correct on the math problem, but the indicator approach that I've used for a long time is that net new highs number. So new highs minus new lows. I've not looked at a peak in new highs or a peak in new lows as a consistent indicator of
because like in 22, for example, in 22, the new lows list peaked in June of 22. By the time the indexes made their ultimate lows in October, there weren't any stocks left making new lows, but there weren't any highs at that point either. So subtracting the new highs from the new lows, it was like subtracting zero. I feel like we're in a similar situation now. Like you might as well not subtract anything. There's nothing happening, right?
Which is fine. If things were going bad, then you would have more new lows and new highs. Like that is the data that I've looked at. We can argue about the semantics of if it's really strong, you shouldn't have any new lows. If it's really weak, you shouldn't have any new highs. That sort of,
I just feel like by the time you start getting new 52-week lows, it's going to be so far into the future.
So that's interesting.
It seems so lagging, you know.
It seems to be, if you think about it, because you think about 52-week lows and 52-week highs being a longer term thing. It's the highest level in a year, lowest level in a year. The way the indicator moves, it's not actually lagging. And so it's a little counterintuitive. If you look at the trend in net new highs, it actually turns pretty consistently with the market in real time. And so following that net new highs, you've captured going back to I think 1990, you've captured 3 times as much of an annualized return in the S&P 500 and only half the volatility as when you've had more new lows and new highs. So it has actually worked out well from a timing perspective, even though you're looking at this 52-week number that seems like it's too slow, that seems like it's too long term to give you that turn in real time.
Willie, talk to me about the sell side analysts. One thing you and I love is sell side analysts chasing price, right?
Yeah.
In healthy market environments and bull markets, what do you see? You see analyst revisions to the upside, chasing price. And then when prices are falling in bear markets and things like that, what do you get? You get sell side analysts revising everything lower, right?
Yeah.
I mean, it's just hysterical. It's just comedy. Very valuable comedy, but comedy nonetheless.
Yep.
What's going on in the sell side community these days?
So earnings revision trend that I follow it for the S&P 1500. And then I've been looking more closely at the S&P 400. Earnings revision trend for the 1500 is trying to rise, but it's not doing it with a whole lot of energy. So analysts aren't chasing with a lot of gusto. So there's not that catch up there that we wouldn't like to see. It's not as robust as we'd like to see, that analysts are having to revise aggressively higher to support prices. From a mid cap perspective, so the S&P 400, you compare the earnings revision trend there to what's happening in the index. The index is broken out. The earnings revision trend is stopped at a resistance level. So we're not seeing that upward revision. So we actually have a little bit of price action moving ahead of earnings revisions at the mid cap level. So I guess the takeaway there is, if analysts don't feel like they need to chase that's not a tailwind that we would like to see if we're going to continue higher right here. Even as we're talking about relatively strong breadth, relatively strong trends, it would be nice to have analysts chasing as a tailwind. That's not as robust right now as I'd like to see it.
What about stocks and bonds moving together, Willie? For most of our career, almost all of our career, right? Again, You're not that, you're only a couple years older than me, right? So for the majority of our careers, bonds have acted as a defensive asset, as a safe haven when stocks are under pressure. You have that negative correlation, below zero consistently for so long, but not now. Stocks and bonds are moving together. Things are different, from what I can tell out there, and I'd love to hear your thoughts. I think a lot of investors are having a hard time wrapping their heads around this change. It's not like a new change. It's been in place for quite some time now.
Yeah.
And the 60-40 portfolio, as dumb as that's always been, in my opinion, to me, it couldn't be dumber now, because if they're moving together, 60 plus 40 equals 100. So you're not really getting much of a mix there. Are stocks and energy the new 60-40 portfolio? And I'll turn it to you.
It might be. That's go back to what is under-owned in the S&P 500. You could argue the energy sector, in terms of its relevance for our day-to-day life. How many stocks now are in the S&P have a larger weight than the entire energy sector? I think we're up to like 7 of them or something.
A lot.
So I like that.
Well, energy, just to be clear, energy is 3% of the S&P 500. Microsoft is more than double that. So is Apple.
Yeah.
Just for the record.
Yeah, and I think there's a couple others in there that are
Nvidia's
larger.
about the same. Yeah, Nvidia's about the same weighting.
Yeah. So I think rather than it could be stocks and energy. I think it's a good time to remind people that it used to be back in the day it wasn't a stocks and bonds asset allocation decision. It was stocks and bonds, cash, commodities.
I was going to say there's another C in there, Willie.
Yeah, returning to what used to be alternatives and were reasonable alternatives, I think makes a lot of sense from an asset allocation perspective. So the way it seems to me is commodities underperformed for so long, cash was just left over for so long that people forgot to talk about it. And so it got left out of the conversation. And whether you want to include it in your portfolio or not, it's important to make that active decision to exclude it at certain points so you remember to bring it up. If you're not talking about it, if you're not remembering it, you're not going to be able to include it until you look back a couple years and say, oh my goodness, look, we should have had commodities. We should have had cash. We should have something other than stocks and bonds in that asset allocation mix, by which point you feel like it's too late.
See, Spencer,
of...
when you were in diapers and Willie and I were learning about markets, the way we learned it was that there were 3 asset classes, right? It was bonds, stocks, and commodities. And the reason I know that is because the ticker symbol for Bear Stearns, which no longer exists, was BSC. So that's how I would remember it. There were 3. And then a funny thing happened when commodities stopped going up for a decade. People forgot about that 3rd one, right? So Willie brings up a great point that there are 3 asset classes. Now, let me ask you this. $6 trillion in money markets. Should we care? What does that mean for you?
There's 2 ways.
4 trillion in institutional. So it's not like it's granny locking in 5%.
Is it still 6 or has it been going down?
No, it's been going up. Just hit a new high.
I've not looked at that real closely. I guess I would have 2 perspectives on it. One, or maybe even 3 perspectives on it. One, you're earning something on cash right now, so it's not as ridiculous as, cash paying 0. So that's one thing.
But after taxes and inflation adjusted, you're actually below 0. To be fair.
But you're earning something nominal, and most people look at what they earn nominal. They don't they don't look at all the other stuff.
Just saying.
JC, you can't hate on inflation adjusting your stock returns and then inflation adjusting.
All I'm saying is don't go running around bragging about your 5% when you're actually laying money out. That's just all I'm saying. Anyway. Not that Willie's doing that or you. I'm just saying.
So you do at least on a nominal basis earn something. I think we have seen a rotation away from holding money at banks to holding money in money markets over the past year or so. So there's been some of that.
Is that institutional or is that just retail though?
It's probably mostly retail, but I've not broken down the numbers and looked at it specifically. The bigger point though is we need to adjust that for the level of the market in terms of market cap. It's that cash number is huge.
Willie and I think the same. I think the same thing. Like the number alone in a vacuum means nothing. Yep.
Right.
So it's 6 trillion in money markets relative to 45 or so in markets.
Well, and so then like this is people arguing over data, and if you want to make one point, you look at the absolute number, and it's either really huge or like in a good way or a bad way. And then if you want to make the opposite point, you base it off of market cap or GDP or some other number, and then it's like, oh, it's nothing. And so it's, people picking fights with each other, looking at the same number presented 2 different ways. Like people make a living
what's
doing
the one that the economist people use? It's like credit card debt.
Oh yeah.
It's like, well, yeah, credit card debt is highest ever, but when you compare it to the amount of cash, it's actually very low, right? Like, not that I pretend to know about any of these things, but I hear things, you see.
So you're looking at the economic data, are you, JC? Wow.
I hear things, Willie, parties in New York and lines in bathrooms. You hear things.
Yeah, right.
Yeah, bro, I'm crunching the economic data. Sorry, I gotta go. Look at my GDP. I gotta look at my GDP stuff,
Oh, yeah.
Right? That's how the kids do it. They look at the GDP.
Yeah. Oh, actually, I will be.
It's gross, is what it is.
This afternoon, macroeconomics will be introducing GDP to the college students. So, super excited by that.
God bless them. God bless them. I'm sure that's exactly what they want to be doing.
Oh yeah, yeah.
Willie, always a pleasure, man.
All right, thanks, guys. See ya.
Willie, you're the man.
Thanks.
Willie Delwiche in the house.
With a new background, I will add.
No, he's had that for a while.
No.
All right.
He was in like a basement.
Yes.
Before.
Still is.
Willie? Yeah.
Anyway.
Moving
on. I like your hat, Strazza.
All Kane store.
It's a good hat. I have the same one. Orange and green looks good on you, buddy.
Well, so yeah, I was gonna save this for recess, but I had to rock my Hurricanes gear today because the Yukon Huskies just got decimated last night.
They got walloped. Yeah.
No, I don't know. But so me and my like college roommates are in the chat always talking about it. We were worried like we're peaking too early. This is no good. UConn's not used to being like number one all season. And we've seen this story a million times. You waltz right in as a 1 seed in the March Madness, you get upset. So I think getting punched in the face yesterday was pretty good for them.
We'll see. Let's talk some earnings here. I want to talk Teladoc. I want to talk CRISPR. If we have time, Solar Edge. We talked Palo Alto already. It's getting cracked out there. Teladoc was the other big disaster of the morning. Down, what is it down? Like 20%, something like that.
Yeah.
On their report. This is a company that since they've been public has not figured out how to be profitable in any way, shape, or form. Their numbers came in below estimates basically across the board. Their earnings, guidance. So I actually no, that's not true. I guess their earnings beat a little bit on a GAAP basis, but still losing money. Their guidance was light. That's the issue here. And down whatever. What did I say? 20%, something like that.
This is
in the ballpark.
A zero. It's been a zero. Like you said, Spencer, it's not going well. It's not moving in the right direction. I don't know why ARK still has this in their fund.
It's still this is still a $2 billion company.
It's just a stupid idea. This is a COVID thing. COVID's over.
It's not a stupid idea. It might be a stupid stock. I don't know if the idea is dumb.
You guys do doctors over the Zoom? I can't do that.
I've done it once. I didn't have like a say in the matter. It was just like,
it's terrible.
We're gonna do this over Zoom, and I was like, okay.
What can you get done? With
not a whole lot. I mean, like anything that's not urgent can be done over Zoom, right? So
yeah, I'm pretty sure most things could be done. I mean, this isn't medical advice, but I'm pretty sure like it's fine, Strazza.
I don't like it.
Strazza likes to go into the doctor's office, have the doctor touch him in all sorts of places. You know, I get it.
Well, no, as long as they don't have to look down your throat or look in your ears or look up your nose.
You just like put your mouth close to the camera.
You probably could actually. You probably could.
Whatever. This is a nothing burger. What stands out to me, earnings wise today, Spencer? You see what I just dropped in the chat?
What, CRISPR?
No, it's just like a change in character. Stocks are just getting whacked on earnings, and a lot of these are not terrible reports. Solar Edge down 18%, Palo Alto 25%, Teladoc 20%.
I know a crazy Cuban who's been telling you that for a couple of weeks now.
Look at this Vertiv. Look at this Vertiv chart. VRT. This is one of those short squeeze names. People have been riding this one all year. Down 15%.
Stocks were not getting Snapchatted in November.
HSBC down 8%.
HSBC took a big write down on whatever Chinese bank they have a stake in. So
shocker.
That was the reason.
Hey, China.
That was the big reason.
China, huh? Hey, China.
Yo, yesterday, I don't remember where it was. I think it may have been in one of the gloom and doom spaces that I hang out in late night. They were talking about how China is the new Japan. Japan peaked 1989. China, you buy that? Got me thinking a little, not gonna lie.
I loved hearing them say that. I don't know if I'm buying it, might be fading it. I also thought in that space is, wow, how wonderful. Just the sentiment around hating the best stocks in the market. I've never heard a group of guys brag so confidently about not owning the best stocks. That was really tremendous. Really spoke to sentiment. People hate this mega cap growth trade, this large cap tech trade. I feel like a lot of people still missed it, and the sentiment is still very interesting. Did you notice that?
One of the things, what I find interesting even more than sentiment is actual price. And, one of the things that, you've been talking about fairly was that, we had quite the sell-off last Tuesday in markets. Did not see follow-through in the back half of the week.
Yep.
Now, like the NASDAQ, for example, is now below those Tuesday levels, right? So is follow-through the following week? Is that enough follow-through for you, or does it not count because it's a week later?
Listen, it's a step in the right direction, but this whole year, bears aren't getting much follow through. They had a couple good days in early January. Other than that, this will be the first time they get 3 consecutive down days. So
at the index level.
Yeah, the tape has been
for the record, the market opened 6 minutes ago. So to suggest that today's a down day is also a little aggressive.
We're not, but this would be a little different if they could, tie 3 together. And again,
don't you have one of these Fed podcasts this afternoon where they talk about their minutes? you know,
Yeah, the minutes release is a non-event.
it's a non-event. Okay.
Yeah.
Are we
JC,
sure?
JC wants the audiobook version of the Fed minutes.
For a long time, I swear to God, I thought it was a podcast. Like they, you know, you would listen to the minutes, like almost like if you were eavesdropping in their conversation. Like that's in my head, that's what it was.
No, it's just meeting notes, man.
I know that now.
On
Still
the
not
point
reading
of
'em.
people hating, on the point of people hating like the mega cap trend, it's almost as if they'd forgotten 2022 when all these stocks got like destroyed, right? Like it wasn't that long ago.
For the record, they started getting
not-
destroyed in 21,
When
February of 21.
and it's not as if they've gone straight up all the time,
No.
right? Like they get crushed every so often. That's what they do, and then if you know, then they seem to come back. So
Generational buying opportunity.
yeah,
Hey?
No.
he's not saying
2022.
Oh yeah.
2022.
Anyway.
I mean, the bargain hunting that you could have done. Ooh, in the second
did.
half of 22.
We did. You were talking about it. We were there.
I know. I got one real quick, and I almost
This
feel.
ain't that.
Listen, I think this is important. I almost feel bad addressing this. Coinbase. There was a comment about Coinbase.
Oh.
Spencer, can you find it and throw it up?
what. So somebody couldn't hit the bid or something.
Yeah,
something like that.
No, but let's just talk about this because it's important. This is an investing show. Mark, I used Coinbase the other day. I was not able to sell at my price. I could not enter. I could only sell at the bid. I'll probably never use them again. You're not going to go to another platform and be able to sell at something besides the bid, right? You buy at the offer and you sell at the bid. That's just what it is. So I wouldn't, hate Coinbase for that. That's just how markets work. It's bid ask spread.
The New York Stock Exchange is like that. The Nasdaq's like that.
Yeah, it's not Coinbase. That's it. There's a little spread there for the dealer, and you're going to pay a higher price and you're going to sell at a lower price, and that's the bid ask.
Options markets like that.
Yeah, it's not a Coinbase thing. I'm not going to sit here and tell you that the fills are great if you don't have Coinbase Advanced, but you're going to deal with the bid ask spread.
Do you know how many times I haven't been able to get my price? Every time I haven't been able to get my price.
Yeah.
So-
My price for Nvidia is $2,000. Nobody's willing to pay that though.
If we all got our price every
And
time.
this gets back to, by the way, this is a great point. It gets back to, when you say, oh, why did the stock go up? Oh, more buyers than sellers. It's like, well, JC, for every buyer, there must be a seller.
Yeah.
Yes, that is true. For every buyer, there is a seller. The key to remember is that there are not an equivalent amount of buyers and sellers at every price.
That's right.
JC.
That's
That's the price discovery.
That's right. I love how Willie always says you need bulls for a bull market. You need bulls and bears for a bull market.
Yeah,
Right?
no, but what he's suggesting is that you need bulls in a bull market, and when you see sentiment overly bullish, it could stay overly bullish for a long time. It's much more informative when it's overly bearish,
Oh yeah.
because it doesn't stay overly bearish for a long time.
Again, second half of 2022, generational buying opportunity.
Yeah, no doubt.
Oh, I think Mark is saying he couldn't sell at the ask. What?
Well, that's why, number one, that's why you want to have multiple accounts, not just in crypto, but in equities as well. And you can go to one of the decentralized exchanges and you could swap them easily. So if you're having any issues in Coinbase, you can use some others as well. So keep that in mind.
Oh, that is weird, Mark. I don't know. Huh. Okay. Sorry.
No broker's always going to be perfect. The brokers have the ability to shut you down at any time they want, and there's nothing you could do about it.
Mhm.
So whether it's equities, whether it's crypto, whether it's anything, having multiple accounts is part of the risk management strategy.
100%.
And it's not just crypto, equities as well.
That's a good lesson.
I had some weird thing on my
You have to learn that the hard way, though, Spencer.
Dude, I had a weird thing on my account last week. They marked me as this pattern thing, and it was wrong. It made no sense. I was locked out.
Oh, you got PDT'd?
Yeah, but it was wrong because there's an account minimum. It only happens if you're below 25. So it was in error, and I couldn't transact for 24 hours. And it's like, what the hell are you going to do? You got to have another account that you can go to in that situation. And we figured it out the next day, and it was just like, oops, sorry. We don't know why that you got labeled that way. And that's
I know nobody's going to read the terms and conditions, but in the terms and conditions, it tells you they can do whatever the hell you want and you can't do anything about it.
And if you've been trading long enough, you felt that in a real way. where they will just go right into
We've
your
all
account
been there.
and do
The
whatever.
login doesn't work. You have a margin call that maybe you didn't cover, error or not. Then you got the Fed call, and then you got the other kind of call, and you got then one of.
It was Schwab, James, and I still love him. It happens.
Talk to Chuck.
It does. Real fast, do we even mention Uber yet? Uber going in the Dow Jones
Thank you.
Transport
Is it?
Index.
Finally.
Amazon's
Replacing
stealing the news of the day.
replacing JetBlue. JetBlue, you're out. Uber, you're in.
Yep.
Uber, you're officially a transportation stock.
Oh, JetBlue,
Wow.
what happened to you? God.
All these airlines suck. It's not just JetBlue. It must have been the more difficult decision was not adding Uber. It was which airline to kick out. That was the more difficult.
Is Uber like automatically now like the largest component? It's got to be close.
I think it might be one of these aerospace and defense stocks, actually, maybe.
Let's see.
You might be right. Oh, no, there are no
No.
aerospace and defense stocks.
UNP, UPS, 150, 125. Yeah, Uber's the biggest.
Wow. I wonder how they chose. I mean, so many shitty airlines to choose from.
JetBlue is not one of the majors, so
It's not?
I mean, they tried and they made a good run for a while. Dude, they were making like a big move like 10 years ago, and it hasn't gone well since.
Is that right?
Wait, I want to clarify something from the chat for Dial. Uber is in the S&P 500. They're in both, right? It's not like they're not leaving the S&P to go into the Dow Jones. They're in both. There are different indexes run by different committees that do different things.
Standard & Poor's does not care what News Corp is doing.
Right. By the way, I looked this up this morning. I didn't realize this is the longest time between changes for the Dow Jones Industrial Average since the 90s. Since the 90s.
But this is the first change since 20?
It's the first change since 20.
Why?
It's been 3.5 years.
I don't know why. Dude, it's weird. It's weird.
Well, they made a lot of changes though in a really short amount of time.
Yeah, they made four in 2020, right?
In 2020, they took out Exxon, Pfizer, and Raytheon. And they also took out UTX. What is that? United Technologies. Yeah, so they took out 4 companies. So yeah, 4 changes in 2020. It was a lot. But
this Amazon thing could have happened then. Or I guess they split in 21, so it could have happened then.
I don't know. All right, we have Mary here from Mornings with Mary. Should we bring her on?
Let's do it. She wants to talk about China.
All right.
Mary.
Hey, good morning, guys. How are you doing?
What's going on? What's going on?
Hey, so
How aggressively short are you this market, Mary?
I'm not short.
So hold on. Let's tell everybody who Mary is. First of all, Mary is our chief concierge officer. Anyone with an account at All Star Charts, please call Mary. If you haven't spoken to Mary, call Mary. If you don't have an account at All Star Charts, I don't know what you're thinking. Call Mary. And so Mary also just so happens to be the biggest consumer of All Star Charts research. Nobody on this planet consumes more ASC research than Mary. So if you have any questions, she can certainly answer. Not only does Mary consume all the All Star Charts content, Mary has gone out of her way to pass level 1 of the CMT. Shout out, Mary. Shout out, Mary. So as the #1 consumer of All Star Charts content, I am always fascinated to hear what stands out to you because I'm jaded. Strazza is jaded. We're like in our own universe. You, however, come from a very unique perspective. So I'm dying to hear what's on your mind this morning.
Quite frankly, I've honestly been sitting on my hands a lot the last couple weeks, especially the last few days, just watching a lot of the levels that you guys talk about. I started taking some of the risk off in some of my big winners, just, capturing some of those gains, keeping a little bit left in the position. But, just because you've got XLF running up into resistance and I've been looking at XBI and IWM for kind of that risk on, risk off. Are we going to break through this level finally or not? Like, you guys highlight so many, key things, key features or, charts to look at that I've been watching those, and I just haven't really gotten a feel like you, because you and Strazza continue to argue like an old married couple every day. You know, are we going to be bullish for the next few weeks? Are we going to be bearish? Are we headed up? Or are we headed down? So I've been kind of sitting on my hands.
You know what? Thank you, Mary, because I tell them like every day, you're confusing people. So
I'm confusing people because I'm counting the number of stocks going up, declining, and I'm shorting stocks accordingly. That's why I'm confusing
I don't know
people.
what the hell you think you're counting. Stocks are more and more stocks are making new short-term highs all month.
First of all, this isn't the Strazza Spotlight. This is Mornings with Mary. So please stop stealing the guest time.
Fine.
That's okay. No problem.
Don't let him do that to you, Mary.
Well, at any rate, you know, so XBI is a chart that I'm very interested in. I did get involved this and have just been watching it just from a standpoint of if this gets really going over the that former area of resistance up above, then I'm going to look at individual names to start adding. Same with IWM, you know, keeps pushing that 200. We, you know, bust through and then we break down, and then we bust through and then we break down, and it's just like whiplash. So, you know,
it's extra sloppy for you.
It's extra sloppy, right? That's a great Billy Madison quote.
That wasn't Edwards and McGee?
That was not in the book. No,
should have been.
Sorry. So one of the
going to be in my book.
I'm sure it will be. One of the stocks I'm still watching, I talked about it last week, is Hood. I know that, you know, you guys are kind of boo-hooing this one on me like last week, but yesterday we got on the analyst meeting and they said, hey, Mary, what are you watching? And this is one that was green on the day when my whole watch list was red. This one ended green, and I still love the base. Eventually, like the laggards, you would think would catch up to, you know, at least have some relative strength. So I don't know. This is a dog. Know what you're trading, but above 13.50, which this morning action is kind of, I'm not going to lie. But I, you know, I like it and I'm watching it. I'm in with a starter position. We'll see how that goes. But yeah, that's one that I'm watching.
I was telling you, I'm trying to like it more. And what you just said, how it spent the last couple of days, you know, really resilient. That's what we need from it, because that relative strength, that relative trend, I really want to see breakout. You look at like Hood Spy, there's some pivot highs there. This is so clean and well defined. If you use those pivot highs, you're not going to get hurt too bad, you know, in the case that you're wrong. So
hold on. So what? If it's above 13, you're good. Below that, all bets are off. Is that about right?
Even like 13.25, like pick that pivot high from December.
Exactly. So
tight.
I got involved. So there is I dropped a VWAP on the highs from December. I got involved right above that. So I'm actually in the green. I'm good from the starter position that I started. If we get below 13, I'm probably just going to sell and be done and take the small amount of money that I did make and just be gone, just because evidently this one's not ready to go. But, you know, over the last couple of days, it's looked like it's been holding on. And, you know, I think there's risk, the risk reward opportunity there is hopefully skewed in favor of reward. We'll see.
How about these energy stocks, Mary? You dabbling in the oil fields?
So I'm looking at energy, definitely. I pulled up Rangefinder actually yesterday, and I was searching energy and just kind of starting to look at charts, kind of an area that I haven't been really paying attention to lately, but you guys have mentioned energy a couple of times. So I thought I'd start a little shopping list, start looking at some charts. I messaged Stephen Fons last night about China, just because last night, all of a sudden, China was up, you know, making moves. And I thought, well, you know, China's going to dig in. It would be about time that it finally, you know, decided to dig in. And so one of the charts that we've talked about frequently here on the show with members is TME, 10-cent music. That's one that we liked just based on that nice base that it's got. And it has started to show a lot of relative strength and making moves as opposed to a lot of other Chinese stocks. I'm going to be looking through a lot of other of our go-tos, one of them actually, names that we look at often in China with Tal Education and go-to BIPs. You know, some of those I'm going to kind of keep an eye on the next couple of days, see what happens and see if this move sticks or not.
In energy, just pinging the analyst chat right now about it. we're seeing what we need to see.
Okay.
Right? If we're going to get some sort of rotation in energy or a new rally phase for these energy stocks, you got to see the leaders leading, and it's happening. Right? So Diamondback really stands out. If you look at FANG, breaking out new all-time highs today. You go right on down the list. I'm going to ignore the midstream operators because the pipeline companies have been one of the strongest group in the market all year. But ignoring those, Venom Energy, oh, that's a pipeline. VVV, Valvoline, breaking out. Yep. Vista, which has been like the strongest, VIST, breaking out. AROC, Archrock, is one that we've been stalking. Looks great. So some new highs in energy today really stands out. And you got to see those leaders lead if you want the rest of the space to participate. And we're starting to see that.
Yeah, look at right. Crack. Crack is front and center for me.
Yep.
You know, Crack is the refiners ETF. And when you look at the energy complex, the oil and gas in particular, nothing's been working. Refiners are the ones that look the best. Crack is a good representation of that. So a breakout to new highs in Crack would be huge.
Yeah,
I like that PARR within the refiners.
Yeah,
Mary, you sticking around for recess, Mary?
I am, because I've got my very best trade to date, or at least for the last week. My very best trade is part of recess.
Real fast before recess, quick question in the chat from Curtis, who's a AAC premium member. He wants to know, is there a free trial for rangefinder? I don't even know the answer to that.
Drop me an email or give me a call, and we can talk about.
Call Mary. She'll set you up.
Question. All right. What's the email? It's let me put it on the screen here. It's info
any of our emails.
Charts.
Yeah, info at All-Star Charts. You can just Mary, MARY, at All-Star Charts. Any of those.
Mary at allstarcharts.com. There we go. Yeah. Okay. Let's do some recess and get out of here.
All right, Mary, let's start with you. Talk to me.
All right, my best trade of the week was a trade that I made with Strazza, actually. And so do you have my picture here? Last night, my doorbell rings, and lo and behold, this beauty is at my doorstep. Key lime pie, direct from the US. Yes, very, very excited. So I am super excited about digging into this with my family tonight. We made the trade. I am sending him some Traverse City cherry pies, which are still, still working on, because he's been gone. Like, he was gone last week. He's going to be gone this week. And I'm like, Strazza, when are you going to be home so that you can receive this and eat it? So.
Strazza sent me some too. I had it last night. My kids loved it. Their first key lime pie experience. They were big fans. Strazza, thank you.
Oh, that's
so nice.
Thank you so much, Strazza. Yep.
I hope you guys enjoyed it. So I showed Rose the pictures you sent, JC, and she goes, "You got them key lime pie? You don't get me key lime pie." So we had to go and get some key lime pie last night. We ate it on the docks. We were thinking about you guys. We were all eating key lime pie, so that's great.
I was eating my key lime pie with a 2003 Sauternes Grand Cru. How you doing? Come on. Shout out, France. Shout out.
Not the big guy. Also, I don't know if there's any difference in the deliveries between the two, but we did Mary's from the actual Kermit's location. And then I thought to myself, I said, I got to check Goldbelly. This should be on Goldbelly. And it's actually far better and cheaper on Goldbelly. So shout out Goldbelly. That's really cool. That they,
huge fan of Goldbelly. So I lived in the city for a long time. I grew up in Miami. I lived in New York for 15 years. Now I live in the suburbs doing this whole dad thing. And I'm totally into it, but I got a raccoon problem, bro. I got this wooden shed. I put the garbage bins in there. It's all pretty, a nice little shed going. These raccoons are going in there. They're eating the wood. They're trying to get into the thing. So I got these raccoon problems. I bought this like this like sauce or whatever that you're supposed to put it that keeps the raccoons away. It cost me $75, bro. Like this thing like that. Keeping raccoons out is expensive. This suburb stuff, bro. Damn.
We had a raccoon problem as well this last summer, and so what we did, I don't know if I should be even saying this because I don't think this is legal in Michigan, but we trapped them. It was a mama and her babies. So we ended up trapping mama. We ended up trapping about 7 or 8 babies, and it was one at a time. We got a big trap off of Amazon, stuck marshmallows in there. They evidently love marshmallows because they look like eggs. And we relocated them. We had to take them about 5 or 10 miles away from our house.
Did you put them at
to a
Carrie and Brett's
wooded
house?
area.
Is that what you did?
Would have been
You dr-
that would have been
Mary,
pretty
that's what we
great.
used to do growing up. That's what we used to do growing up. We would trap them and then
Trap
just
'em
drive
and
a few
then
miles
drive 'em,
away.
yeah.
These
drop
people
'em
on
off.
Twitter want me to shoot them. I don't think that's
I don't
a
know
good
if you
idea.
can do that in your home association, can you?
Oh, shoot.
I mean, my neighbors all have like these dope pellet guns. They got pellet rifles. They got hand pellet guns. I don't have any of that stuff.
Call them up. So my neighbor here, right down the street, you're not even gonna believe this. He feeds the stray cats, so he puts like food out in his living room, leaves like the door open, so they walk up the porch into the living room. They're eating. Raccoons figured it out, started coming. They go and eat in his living room every day. There's just like raccoons hanging out at night, walking around. Like I'll come in and see like the raccoon tracks. Very strange. The neighbors don't love it. It's kind of hilarious.
Oh, really? They don't like the raccoons eating in their house?
Can't imagine
But
why.
he likes it.
All right.
Yes.
My recess is a couple things. I read an article last Friday that really freaked me out. It went kind of viral. It was by a financial advice columnist for the New York Magazine, who wrote about how she got scammed out of $50,000, and the whole thing was like a giant slow motion train wreck that you could see coming, and it was honestly painful to read.
And this woman gives financial advice?
Well, yeah, that was the whole point, Steve, is that everyone is susceptible to being scammed, especially if you think you're not, you are. We are all susceptible to being scammed.
Yeah.
Especially when and she admits, like, she was like, what was I thinking? I'm an idiot. And that's the whole point. So it really freaked me out. I'll drop it in the chat. It was a painful read, and just reminded me that, like, we are all susceptible to being scammed. Don't answer the phone.
Sure.
Anyone, don't answer
me.
the phone.
Answer the phone if it's me.
Right. Answer the phone if it's Mary. Otherwise, don't answer the phone.
I had a bad moment with Coinbase a few months ago. I must admit, nothing happened, but afterwards, God, scary. Yeah.
It really freaked me out.
I got a quick one.
Yeah.
Happy birthday, Mom. Love you. Can't wait to see you this weekend.
Happy birthday, Miss Strazza.
Happy birthday.
Happy birthday, Mrs. Strazza. Last thing is super hyped for tonight. JC is going live at 5 p.m. for the technical analysis boot camp. If you don't know what I'm talking about, I'm going to put a link up on the screen. It's a QR code. Go ahead and scan that, and we'll see you there. It's going to be a fun time.
Love it.
Super excited for this, JC.
No, at least somebody is.
I'm
3
excited.
hours. 3 hours of JC tonight. All right.
That's a lot.
That's
a lot of JC.
Aggressive.
That is a lot. That's a wrap. Thanks to Willie for hanging out. We have Hot Corner at 1 o'clock today. Stay tuned for that with Strazza. And that's it. That's all I got. Go make some money. Catch you guys later. And that's it.
Adios.
Hump day.
See you tonight. Bring your questions.
I can't take no loss.